Saving America one entrepreneur at a time. It's the Biz Wrap Podcast with your host, Michael Manahan. The show that celebrates small business and entrepreneurs. It's Biz Wrap Radio with your host, small businessman, educator, and author, Michael Manahan. And welcome to another edition of Biz Wrap Radio. It's your host, Michael Manahan, and thank you so much for joining me today. We've got a great show lined up for you, but if you're new to Biz Wrap Radio, we are the show all about small business and entrepreneurs. Yes, we are the show that's fighting for the small business people and the entrepreneurs of this country. Now, you may not know this, but as we move out of the recession, most new jobs are created by small businesses, and most people in America actually work for small businesses. But what happens when the economy starts to flutter? Is our government helping all of the small businesses? No, they're bailing out the fat cats on Wall Street and the big unionized firms in Detroit like General Motors. And you know, if you're own a dry cleaner or a small restaurant or a small equipment company, you're a roofing contractor, or you're a plumbing contractor, if you're one of those people that make this country work, well, screw you. The government doesn't care. They only care about the fat cats and the big corporations. So we have to have somebody fighting for small business. And now let's get on with the show. I'm very excited to have with me as a guest a tax expert, yes, an income tax expert, and we're going to talk a lot over the rest of the hour here about income tax, because you know I think it's got to be the biggest pain in the ass for every single business person in the United States of America. But I have with me Diane Gardner. She's the owner of TaxCoachForYou.com. That's TaxCoachForYou.com. She's the author of 5 books on taxes, including her most recent book, Stop Overpaying Your Taxes. Diane, welcome to the show.
Thanks for having me, Michael. It's quite an honor and a pleasure to be able to just sit and chat with you today and share some valuable information with small business owners across the country.
Well, I think everybody is interested in I don't know why we say this. We say saving money on taxes, like it's an option we have. Can you really save money on taxes, or do you just have to pay whatever the government tells you have to pay?
Well, contrary to what most people believe, you really can save money on taxes, but to do it, you have to plan to make it happen. It's not something that you can just kind of after the fact go, oh, well, I guess I should have done this, or can I just pick this number off the ceiling and we'll use that number on my tax return, and those types of things. But with proper planning, you really can save money, and you can decrease your tax bill with the IRS or with your state or with both, and put some of that money back in your pocket where it belongs, where you can help grow your business, or maybe it's take that much-needed vacation that you haven't had in years, because as business owners we're all kind of bad about doing that. Or maybe it's expanding your business. Whatever it might be, you can put some money back in your pocket and do those types of things. And I always say, let the government pay for it.
Well, look, the government's paying for a lot of other stuff they shouldn't pay for. Why not pay for your vacation, right?
That's right.
Yeah. Well, now, I remember years and years ago, I'm old enough to remember this, when, my gosh, there were so many things you could do in order to save money on taxes. There was these tax-free investments. You could invest in oil and gas deals and real estate deals, and you could write off the interest on your credit cards and your car loans. And I mean, it was just a feeding frenzy of strategies and ideas for saving money. But so many of those have disappeared over the years. What's left? What's one idea that we could use today to save some money, if not on our 2014 taxes, certainly on our 2015 taxes?
Well, Mike, probably one of the biggest tax saving strategies out there that I see with small businesses is making sure they're in the right entity type. very, very frequently, I see a business owner come to the door of my office with maybe he needs to file the current year's tax returns or sometimes even 2 or 3 years' tax returns because he's just gotten behind, know they owe money, and they don't know what to do about it. Well, most of the time, they're in an incorrect entity, and that incorrect entity can be costing them thousands and thousands of dollars in tax every year, and they don't even know it. And I'll give you an example. I met a local author at a book signing event I did last summer where I was pushing one of my new books that had come out, and he had no idea anything about deductions or taxes or anything. And so I got him in my office, and we sat down, we talked, and started looking at his prior year's tax returns that he had prepared himself and found enough deductions that we were able to amend his tax return and get $3,000 back in his hand. Then we sat down and did some analysis on what he was doing today and where he planned on being over the next few years and factoring in some new books he had coming out and some of that kind of stuff, and put together a customized tax plan for him. And happy to say when we did this year's tax return, his savings were between $8,000 and $9,000 between federal and state. And he had a big old smile on his face because
I bet he did.
Wife was
Wow.
trying to buy a house.
Yeah, that's a lot of money. So what kind of
a lot of money.
What kind of entity should somebody be using if they're in a small business?
Well, that really depends on the type of business that they are. I like to look at not only tax savings but liability protection.
Mm-hmm.
Are they looking for some of the fringe benefits, being able to write off retirement plans and just more of that kind of stuff, or are they more looking at the tax savings angle of things? A huge mistake people make is staying in a sole proprietorship as their business grows and they start becoming more profitable, because everybody knows that your net profit of your business as a sole proprietorship or a general partnership is subject to that self-employment tax of 15.3%, over and above your federal and any state tax you might owe.
Gotcha.
So if we can restructure that entity into a different type, or that business into a different type of entity, I can save that 15.3% self-employment tax on at least part of that net profit. Not on all of it, but at least part of it.
Okay, so well, definitely. If you have a small business out there, you should, for the most part, not be operating as a sole proprietorship. You really should have some sort of a legal entity, whether it's a C corp, S corp, LLC. Now, I hear a lot of arguments. Somebody says, "Oh, you should have a C corp," or an S corp, and then somebody else says, "No, you should have an LLC." I mean, does it make much difference? Is in terms of tax strategy, at least between, say, an S corp and an LLC?
I'm going to use the famous accounting term and say it depends. It depends on what state you live in. It depends on the type of business you're running. Here where I'm located in Idaho, we're a very LLC-friendly state, and so I see mostly LLCs. But the beauty of an LLC is it's a hybrid entity, so it can act like a general partnership, it can act like an S corp, it can act like a C corp, or it can even act like a sole proprietorship. And so I kind of like that LLC entity because then as my clients continue to move and grow, we can ask the IRS for them to be treated as an S corp or a C corp for tax purposes, but they're still an LLC, so they don't actually have to issue shares of stock. They don't actually have to have shareholders meetings and some of those things that you should be doing when you're a corporation. So it allows them to kind of be a small business, but yet act like a big business.
So there's a lot of flexibility. Well, that's great. Look, it's BizRap Radio here, your host, Mike Manahan. We're on with Diane Gardner, taxcoachforyou.com. We got to go to commercial break, but we will be back right after these messages. And welcome back to BizRap Radio. It's your host, Michael Manahan. Thanks so much for sticking with us. And if you just joined us, we are talking today with Diane Gardner. She is the owner of taxcoachforyou.com. And by the way, that's taxcoach4you.com. She is the author of 5 books on taxes. Most recently, Stop Overpaying Your Taxes. And we were talking about in the last segment about strategies for for reducing taxes. And one of the things that Diane had mentioned was if you are a small business person, there are a number of advantages, including tax advantages, of having some form of a corporate entity. She's located up in Idaho and says LLCs are quite popular there, and Idaho is a very LLC-friendly state, but you should probably be looking at having some form of entity, whether it's an LLC or an S-Corp or even a C-Corp, as opposed to operating as a strict sole proprietorship. There are tax advantages to that. Diane, thank you for sticking with us for another segment on the show.
Yeah, thank you. This has been fun so far.
Well, let's have some more ideas. What else can somebody do to potentially save on their taxes?
Well, Mike, another area that I see is since we've come through this recession, an awful lot of people were displaced out of their jobs. And some of them have gotten creative and are running small businesses from their homes. I think we probably have more home-based businesses now than we ever have, I would imagine, because with the Internet, it allows them to be up and playing pretty quickly. They don't have to be brick and mortar like some of us are. And as a result of that, there's more people out there that I think are missing the business use of home write-off. So whether they've got a room in their home that they're using exclusively and regularly for record keeping and running of their business and stuff, they may not be realizing that they can be potentially writing off part of the cost, part of their housing costs. If they own a home, it's a percentage of their mortgage interest and property taxes and homeowners insurance and utilities and even their security and some of their repairs. If they are renting, then you substitute rent for the homeowners or the mortgage interest and the property taxes. So that can be a decent-sized little write-off for somebody who's operating out of their home.
Now, I'm somewhat familiar with that, and but does that cause problems if let's say, like, I've got I use both my garage as well as one of the rooms at my house, although I have two offices, but I still do work out of my house. If I took a write-off, am I going to have some issues or consequences, 3-4 years down the road, decide to sell the house and move?
Well, in previous years, my answer would have been yes. But the IRS has relaxed their stance on these home office deductions. Back 10, 20 years ago when I was doing taxes, you used to hear people say, I don't want to claim it because I don't mean an audit. Well, the IRS has backed off on that, and they even have just a standard deduction type thing you can take for a home office. The trick being that it is where you regularly do your book work, your management work, you take your appointments, that type of thing. So if you have a home office and another office, your home office needs to be where you do all your book work, your record keeping, your scheduling, that type of stuff. To where you can have your other office might be just where you take your appointments. But all your actual running of the business needs to happen out of your home office. So in my case, that doesn't work. I do have a home office, but it's where I go to after work, and it's where I write, and it's where I listen to webinars, and my research and stuff is all done from there. But my basic running of my business is out of my actual office in town. So I can't use that one for myself, but it sure works well for a lot of people out there who really are running a business from home.
Do we have a situation? Look, I'm posing it as a question, but it's a rhetorical question. I think you'll realize once I ask it. But do we have a situation where the IRS is literally so out of date in terms of how business works that they don't have a friggin' clue? I mean, we're talking about home offices. I mean, I'll give you an example. My accounting system is that I use for my businesses. It's a virtual system. It's in the cloud. My CRM system is in the cloud. My shopping cart is in the cloud. I could be doing business from my home, whether it's my accounting or otherwise. I can be doing it sitting in a Starbucks. I can be doing it sitting on my boat. I mean, it's you don't. I mean, I think we're beyond the days where people say, "Well, I only do my accounting in one office and I meet my customers in another office." That's not the way the world works anymore. We're doing business.
That is still Yeah, but that's still the way the IRS says it.
They're so outdated. They annoy me so much. And I don't know, did you see that recent thing, the big scam in the IRS that's going on? Apparently people are calling taxpayers like you and me and pretending they're from the IRS and basically saying, you need to write us a check for like $10,000 or we're coming around tomorrow and throwing you in jail. And people are writing the checks because they're so afraid of the IRS. I mean,
yeah, we've cautioned our clients about that. Please don't fall for that scam.
But, you think about it. If somebody called you from Macy's or from Target and said, hey, you owe us $10,000. If you don't pay, we're coming around tomorrow to throw you in jail, you wouldn't believe it. You'd say this is a scam. But that's how afraid the taxpayers are of the IRS. We believe that. Because a lot of us think that's kind of the way the IRS works. They're kind of like right there next to those guys that worked with Hitler. What would they call them? The Gestapo?
The Gestapo,
yeah,
right.
Really. But anyway,
people don't realize
stuff.
that they do have certain things that they must abide by, and they have certain protocol they have to follow. And fortunately, they can't just call you and say that you owe money.
Yeah. Well, that's a good thing, I suppose. Of course, now they're going to be after me because we're doing this radio show, and I managed to say something nasty. Hey, look, I understand. We got to have taxes. You got to collect the taxes. We need money to run the government, but boy, they make it awfully difficult for us to do what we're trying to do. Anyway, let's go on to some more ideas. Now, a lot of people I've heard put their kids on the payroll. They got 3 kids, 4 kids. Every one of those kids is getting a check from Pop. They're in there. Maybe they're working in the business. Maybe they're not. How does that work? Is that allowable?
It is allowable, but they want to dot their I's and cross their T's, and meaning that those kids do need to really be working in the business. You need to have a time card that they fill out or a timesheet or something. You need to make sure that the duties that they're doing are age-related. The IRS says that a child has to be at least 7 years old to be able to work in your business. So at 7 years old, you can't have them doing your accounting probably. So you just have to make sure things are age-related and that you're not paying them any more than you would pay somebody else of that same age to do that same job, or their same skill level.
Okay, well,
So
nowadays with the way young kids are these days, I mean, in terms of internet, website, social media, I mean, if you're a business person, you got a 14, 15-year-old at home, make them VP of social media and get them to be making all of your posts on Twitter and on Facebook. And I'll tell you can pay people a lot for that because I see ads on the internet, $50,000, $60,000, $70,000 a year for managers of social media. So you could actually have your kids really help you because if you're like me, I'm almost 60 years old. Some of the social media, it's tough to keep up with, but I see these young folks, they're on there on their computers all the time and posting on Facebook and Twitter, so it's a good idea. It's a good idea to get them involved in your business anyway. That's a whole other issue, but I often find entrepreneurs who do not engage their children in their business. It's like, well, I'm working in the business, and my goal is to make enough money so I can send my kids to university and they could get degrees and become lawyers or tax professionals or accountants. I think that's really sad. I really like the idea of somebody, if you own a business, getting your kids involved in that business, giving them part-time jobs in the business, and letting them understand the importance and the significance of entrepreneurship and going out there and serving customers and taking care of people and the joy you get out of that, the contribution you make to other people's lives. So, yeah, that's a great idea. Okay, we are closing in. We've got maybe about 45 seconds here left before we have to go to commercial break. Diane, I know people are dying to after listening to this thinking, gosh, I should talk to Diane. What's the best way for people to get a hold of you?
I would say go out to my website, the www.taxcoach4u.com, and pick up some of my free stuff out there. I've got a free Stop Overpaying bundle where they can get a couple chapters of my newest book. There's videos, special reports, all kinds of good stuff that they can pick up out there and start learning about how to save some money on your taxes.
Okay, fantastic. So go to taxcoach4u.com. Get some free stuff that will help you. And if you want to reach out to Diane to get some personal counseling, you can. It's Mike Manahan, BizRap Radio. We're going to be back right after these messages. And welcome back to BizRap Radio. It's your host, Michael Manahan. If you just joined us, we are, of course, the show all about small business and entrepreneurs. And today's show is all about taxes. We are talking to Diane Gardner. She is the owner of taxcoach4u.com. That is taxcoach, the number 4u.com. She's author of 5 books on taxes. Most recently, Stop Overpaying Your Taxes. We've been talking about strategies that you can use to reduce your tax liability. And Diane, thank you so much for sticking with us for another segment of the show.
Yeah, I'm looking forward. Let's keep going.
Yeah, so we talked about some really good ideas. We talked about corporate structure, that you should have an LLC or an S-Corp or something like that as opposed to just a proprietorship. We talked about the home office deduction, which a lot of people have kind of forget about. If you do operate your business out of your house, you can get a home office deduction. We talked about putting your children on the payroll, and not just putting them on the payroll, but getting them actively engaged in your small business. There's so much kids can do. These laws, kids shouldn't be working, but we don't want slave labor out there. You don't want your kids working 14 hours a day, but, get them involved in the business. Have them do your social media or other things, and you can pay them to do that, which could transfer some of your income potentially to them legitimately. And, of course, the theory being they're going to be in a lower tax bracket than you would be. But, Diane, I want to talk a little bit about medical expenses, because I know if I'm a big corporation and I pay the medical costs for my employees, it's almost like it's unlimited. I mean, whatever the big corporation pays for its employees, it can pay for health spas, it can pay for memberships down at the local gym, it can pay all sorts of stuff, and it's all written off by the big corporation under, health benefits for our employees. But I understand, and I could be wrong, so that's why I'm looking for you to correct me, that as a small business, I don't have near the flexibility that those big corporations have in terms of what I can deduct in terms of health care costs. Can you enlighten us on that whole issue?
That is a true statement, Mike. One of the advantages of being a C corporation is that you can write off more of these benefits types of things. So you can dig a little deeper into the employee health care type benefits, and hopefully you or your family members maybe are the only employees in your C Corp, and then you're willing to put a little more into that than you would be if you had a whole bunch of employees. But those of us who aren't C Corps, who are just running a small little business, maybe they're a sole proprietor, or maybe they're operating as an LLC or something, they can still write off a few things. There are some write-offs. One of the best entities for writing off some health benefits actually is a sole proprietorship, which is kind of surprising.
Wow, I wouldn't have figured that. That's amazing.
Yeah, and that is because if it's just you and then maybe you have your spouse helping you in the business, you can hire your spouse. And especially if you have no other employees, you can hire your spouse, and then you can pay them a salary or not, and you can even pay them just in the form of medical benefits. And you can set up what we call a Section 125 plan or a medical expense reimbursement plan, and be able to potentially write off all of your health insurance and your deductibles and stuff like that through your business. Now, it doesn't work too well if you have several employees, because what you do for one, you have to do for all.
Ah, I got you. So this is only if you
single-member business. This is kind of cool.
Yeah, that's a great idea.
If you have a spouse.
But you can't do that if you're a corporation. Is that what you're telling me? You can only do that if you're
a C Corp.
Uh-huh.
If you're a C Corp, you can do something real similar to this, because then you are the employee of that C Corp, and you can pass those benefits on through your family as well. But here again, if you've got quite a few other employees, that gets rather expensive, and most of them can't afford to do it.
Because what you offer, the way health benefits work, what you offer to one employee, you have to offer to everybody. Is that what you're saying?
Correct. Yeah, you can't discriminate between related, employees and things like that. You have to make it a blanket offering.
Gotcha.
So it works best on these really small, closely held businesses that, potentially it's your business and you have maybe, your spouse helping you. Those work really great for this type of thing. And these really small, just an owner and maybe a spouse are able to stay out of some of the Affordable Care Act or the Obamacare requirements that have now limited us to what we can write off in our business. That law has a lot of hidden pieces in it, and some of it has to do with taking away a lot of the health care expenses that we used to be able to write off in our businesses.
I didn't realize that. So Obamacare has eliminated some of the write-offs we used to be able to take.
Correct.
Yeah. I knew there was a catch in it there somewhere.
There's all kinds of them in there.
Oh, my
surprise,
goodness.
Surprise.
Yeah, really, really. Well, I don't want to get into the political side of Obamacare, but it just seems that every time they turn around, they make it more complicated and more difficult. One of the issues I have about taxes is, I swear, if you work at McDonald's flipping burgers, you're still going to have to go and hire somebody to do your taxes because it's not simple. And the tax forms, I'm a professional, I'm an MBA, I'm a college professor, I've been chief financial officer of numerous companies. I look at some of these tax forms and I'm scratching my head. What the heck are they talking about here? Why can't they just come up with a real easy way for people to pay their taxes? But of course, you're probably not the person to ask that question of.
I scratch my head, too, and go, why? Where are we going with this? Why do we need to do this? I agree.
But that brings us to... no, go ahead, Diane.
I say something sad that I see is older people that are in their 90s and still having to file a tax return. It's like, leave them alone. They made it to 90. They should get a get-out-of-jail-free card.
Oh, really?
But they're still having to file.
Wow, that is unbelievable, that is a big issue. The aging population we have. My mother she'll turn 98 this year, but she has a very serious Alzheimer's. She couldn't file a tax return if her life depended on it. So, we family members have to jump in and take care of all of that crap for her. You're right. We should leave these old people alone. Anyway. Particularly people like my mother, because she doesn't have any money. It's different maybe if you're a 98-year-old billionaire, but she's no billionaire, I can assure you.
No, but I have a few that are in nursing homes, and we're running back and forth with tax forms and stuff for them.
Oh, that is sad.
They shouldn't have to file at that point.
They really shouldn't. Well, maybe we can get that law changed. Okay, look at one of the things that I've come to realize, that the minute you start making a little bit of money, and given the tax rules are so convoluted and complicated, you really do need to work with somebody. You can't be trying to do this. First of all, you try to do it yourself, you drive yourself crazy. But secondly, you may be missing huge opportunities to save money. But on the other hand, I've also heard people who said, well, I had somebody doing my taxes for many years, and then that person, whatever reason, we parted ways. I hired a new person, and this new person is doing everything differently, and I'm saving much more money. So not all tax professionals are the same. How do you find the right person to work with, and how do you know they're doing what they should be doing?
Well, probably the best thing to be looking for is, does this person have training in proactive tax planning? Do they have initials like Certified Tax Coach, CTC, behind their name? If they do, you know that you can just put stock in the fact that they've gone the extra mile, they've learned how to do the appropriate structuring of your business, notifying you of all the expenses that you can get, because not all accountants are created equal. Unfortunately, there's a whole bunch of them out there who do what we call looking in the rearview mirror. Mm-hmm. All they do is pick up your totals and drop them on the forms and say, I'm done. Next.
Right, yeah.
And take the next person.
Yeah, and then charge you a bunch of money for doing that.
You bet, yeah. You want somebody who's real proactive on your behalf. It helps if they're entrepreneurial themselves. because they're going to be looking out for things. They're going to be out there getting more education and constantly learning instead of just sitting there and taking the necessary courses they have to take to keep up on tax law, but that's all they're doing in their business.
Gotcha. So you want to do some due diligence. Now, you're in Idaho, but do you take on clients in other parts of the country?
I do. Fortunately, I'm an enrolled agent, so I'm licensed by the IRS to operate in all 50 states. So that really opens the door for me to be able to help people. I've got clients from Pennsylvania all the way back over this direction to Hawaii.
Wow. And I hope you get to visit the clients and then charge them for the cost of the trip.
Not yet, but that's on my bucket list.
Okay, we are talking to Diane Gardner. She is the owner of TaxCoach4You.com. Check out her website. Diane, can you stay with us for one more segment?
Sure, Mike.
Okay, fantastic. It's Mike Manahan, BizRap Radio, talking to Diane Gardner, the tax coach, and we will be back right after these messages. And welcome back to BizRap Radio. It's your host, Michael Manahan, and thank you again for sticking with us for the hour. But very interesting show going on. If you just joined us, of course, BizRap Radio is the show all about small business and entrepreneurs. And today we're helping entrepreneurs with a really nasty subject that most of us just hate to talk about, but it's taxes. And we have a tax expert on with us. It's Diane Gardner, the owner, TaxCoach4You.com. That is TaxCoach, the number 4You.com. She's the author of 5 books on taxes. Most recently, Stop Overpaying Your Taxes. And Diane, thank you so much for sticking with us for another segment of the show.
Yeah, thanks for having me. This has been a lot of fun, and hopefully we're passing on some really great information.
With some more ideas and structures. And all of us know that the IRS some years ago reduced the deduction you can take for meals and entertainment. So if I'm wining and dining one of my clients, we go out to some nice restaurants, $150. I cannot write off $150. I can only write off for tax purposes 50% of that. Is that correct?
That is correct. Unless you're in the transportation industry, then it's 80%.
But
they're not usually wining and dining anyone. They're usually on the road.
Right. But now on the other hand, and again, I'm not 100% sure of this, so I'm looking for you to guide me. If I fly up to Seattle to visit a potential client and we go out to dinner, is it still only 50%, or can I write off the whole thing? Because somebody told me if you're on the road doing business, you can write off the whole amount of your meals and entertainment.
And that is true. If you're on the road, you can write off 100% of your meals and entertainment. But you want to make sure you've really documented things and that you've got an itinerary and some things like that so that you can show you were definitely on the road and that it was business related. And you know, I always tell my clients on that receipt, make sure they have the date, you know, obviously the dollar amount, the name of the restaurant, who you met with, and what was your topic of conversation.
Yeah, and excuse me, my voice is cracking on me here. And nowadays you can really do that easily. I can't recall the name of the app, but there is now an app that you can load up onto your phone, and literally as you finish the meal, you know, take and write on the back of the receipt the name of the person, you know, what you talked about, and then you can snap a photo of the front and back of the receipt, and the app actually will store that, and I think even transfer it up to the cloud or something. So you've got that record of that particular meeting with the customer. Because I know I'm really bad at this. I take, particularly when I'm traveling, I just shove all of those receipts into my briefcase. And then when I get back after being on the road for a week or something, you know, I've got 30, 40 receipts. I've got rental cars, gas, hotels, restaurants, and all the rest. And I shove them in an envelope, and I say, well, when I get time, I'll go back and organize these and write everything down. But guess what? I never get around to doing that. They just stay in that envelope and lying in a box. And then I had a situation where I actually needed some of those receipts. I pulled them out. Those receipts fade after time. And some of them, I guess it depends on the ink that the printer uses, but you pull out that receipt from 6 months ago, it's not there anymore. It's disappeared.
Yeah, it's like the old days with the old thermofax machines. You got to photocopy those receipts or scan them or do something to preserve them.
So let's talk about missed deductions. What are some things that you see that entrepreneurs are just absolutely missing? They're just, for whatever reason, they're missing the boat on.
Probably another big area is in the area of writing off miles or their automobiles, whether they're taking the standard mileage allowance and just tracking their miles or whether they're actually tracking their actual costs. I'm surprised when I meet up with a new business owner that says, I didn't know I could write off my miles. And it's like, oh, yeah, that's a big deduction. And making sure that they are keeping a written mileage log, a contemporaneous written mileage log, and which means that you're not supposed to go back at tax time and recreate your mileage log from the year before. You're supposed to keep it as you go, and we would know. None of us would ever do that.
Of course not.
And I'm laughing because I send calendars home with clients all the time. Please go back and recreate your mileage log. But anyhow, that's a huge deduction, or it potentially can be. And if you're working from your home, then from the minute you leave your home and heading out to do anything business-related, that is a potential business deduction for you. If you work at an office, from home to the office is not a write-off, but then from the office on out to your various appointments and wherever you're going is a write-off. So you want to keep really good records, because I've got clients that are getting write-offs, anywhere from $15,000 to $30,000 a year on their mileage.
Wow.
Or their actual costs, because they're on the road all the time with their businesses.
And you're just able to calculate the number of miles and basically take a standardized preset deduction that's set by the government. Is that what you're saying?
Correct. Yeah. For 2015, it's 57.5 cents a mile. If they're still working on 2014 tax returns, it's 56 cents a mile. So you have two choices, standard or actual.
You got to keep track of those miles. Yeah, and that is something that's such a pain in the ass to do, and most of us do not do a good job of doing it. I was reading an article I can't remember where it was, probably on the internet somewhere, and this guy was talking about that there is no compliance burden by the IRS because this individual claimed that a good company is keeping good records, and that's all the IRS asks of you. But I don't know any business on the planet that would make their employees keep a detailed record of everywhere they drove, except maybe if you ran a transportation company. But if you had a salesman on the road, you would not require that. That is not part of normal business activities. That is a compliance issue that we do solely for reporting purposes in order to justify the taxes that we pay. So that's not quite true. But on the other hand, if it is going to save you money, it's probably not a bad idea doing it.
Right. And I know there are apps you can get on your phone that you can track your miles that way, because I've got a couple clients that email me the report at the end of the month right off of their phone.
Wow, that's a great idea. Hey, look at Diane. We are coming up to the end of the show, and I really do want to give a chance once more for to get your website out there for people who are interested in contacting you. It is taxcoach4you.com. That's taxcoach, the number 4you.com. It's Diane Gardner. She has all sorts of free stuff on her website that you can get to help you with your taxes. And of course, if you need a tax advisor, a consultant, somebody to help you with tax planning, Diane, I'm sure, would love to talk to you, and she can help you regardless of where you are, at least if you're in the United States. If you're in Canada and you're listening to this, she's probably not going to be able to help with your taxes up there. But at least if you're in the United States, contact Diane. Diane, I really appreciate you being on the show. Thank you so much.
Yeah, thanks for having me. This was fun, and it's always great to get to pass this information on and help people become more educated so they're not overpaying their taxes.
Yeah, and you have an obligation. I think we as business people and as taxpayers, we have an obligation to pay our taxes, number one. But number two, we have an obligation to pay the least amount of tax possible as allowed by law. And I'm not in favor of tax evasion, but if you can avoid legally paying a tax, you should do it. You have a duty to do so. Anyways, it's Mike Manahan, BizRap Radio. You know, here at BizRap Radio, we believe we can fix the United States of America through a fundamental concept that individuals pursuing their own economic interests in free markets will create more prosperity for more people than can ever be achieved through government regulations and a planned economy. It is BizRap Radio, fixing America through individual economic freedom. I am your host, Michael Manahan. Please don't forget, check out our website, bizrapradio.com. Listen to all of our archived shows, read the great articles we have on the website, and sign up for our newsletter. BizRap Radio, Mike Manahan, thanks for joining me. We'll be back again next week with another edition of BizRap Radio.